I'm sure you've heard all the news. A deal on the debt ceiling has been reached. Yay! So how does this affect the housing market? Well, that's what we're covering today. Hi, my name is Jade Lee-Duffy at Jade Just Sold It. And if you're new to my channel, welcome. Thank you for checking out this video. And if you like videos on San Diego and the housing market, please hit the subscribe button below and also the notification button. So now let's get into the video at hand. So how does the debt ceiling affect the housing market? Well, before we get into that, what is the debt ceiling? So the government needs money to pay for certain things, such as Social Security checks, keeping the national parks open, the interest on the debt, and military salaries. So if they don't have enough money or they reach the ceiling of how much they can borrow, they need to go to Congress to ask for more money. So that's what's been happening the last few weeks. And finally, last week, they finally came to an agreement and we've averted disaster. But for the last few weeks, there have been numerous headlines, as I'm sure you've seen. So such as in Forbes, it says a debt ceiling crisis would hit the housing market like a hurricane. On CNN, they said home buying costs could spike by 22% if US defaults on its debt. So there have been numerous headlines. I'm sure you've been wondering what would happen. And so luckily, it's all been averted. So let's connect the dots between the housing market and the debt ceiling. So the housing market is obviously a very big part of the economy. And if there's any uncertainty or volatility, that could have a chain effect on the economy. And this also affects consumer spending and business sentiment and also the stock market and investors. So as investors pull out and the stock market can go down or tank, this would have a decline in consumer spending. And obviously, if there's less consumer spending and less people buying houses, house prices could go down. And if house prices go down, then there could be negative equity for homeowners. And homeowners use the equity in their house and how much it's valued for to apply for loans. So they use the house as collateral against loans. And also, if home prices were to crash, then homeowners would have negative equity where the outstanding mortgage balance would be more than what the house is worth. And then if there's negative equity, there could be more foreclosures in the market. And if there's more foreclosures, there'll be more houses on the market. And if there's more houses on the market and more supply, this could drive down home prices. And it's just kind of a downward spiral, what happened in 2008. However, thanks to the deal on the debt ceiling, this has all been averted. So there's no housing crisis. This stability and confidence back to investors and the housing market and the economy. So disaster has been averted. In an article from the New York Post, it said Biden says U.S. dodged economic collapse in first Oval Office speech since deal reached to raise debt ceiling. And the good news with the deal on the debt ceiling is that mortgage rates have started to fall. Last week, they ticked up into the sevens, which was a little scary, I'm sure. So according to this latest article from Bankrate, it says today's mortgage and refinance rates, most rates fall, which is good news. So just scrolling down to this article, it says here mortgage rates for home purchase. The 30-year mortgage falls by 0.20%. So average rate you'll pay for a 30-year fixed mortgage is 6.99%, down 20 basis points. So last week it was 7.19 since the same time last week. A month ago, the average rate on a 30-year fixed mortgage was lower at 6.87%. So all this uncertainty with the debt ceiling and volatility obviously drove mortgage prices up. But now that there has been a deal that has been reached, so hopefully mortgage rates will go down. So today's quick video helps explain how the debt ceiling deal helped avert a housing market crash. If you like more videos like this, please subscribe to my channel below and hope to see you in the next video. Thanks.